The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Thursday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN just after 9 a.m. Eastern Time, following quite a day yesterday to the upside in the markets. 90-day pause in tariffs, except for China. Things get ratcheted up, and boy, you talk about a day, man. Haven't had a day like that 17 years, 2008. Remarkable that we never got a day that big, even during some of the COVID accelerations that we got. Nonetheless, we had some big action during COVID in terms of volatility, but yesterday's acceleration higher, dynamic changer, and yeah, we have the S&P straight up almost 9%, NASDAQ 100, NASDAQ up almost 12% right now, but this morning, slightly in the red. S&P's off by 1.7%, negative 93 points at 53.98. NASDAQ 100, we're off by 425. Any other day, it would seem like a huge move. Today, it just seems like a small give back for the type of volatility we're dealing with in this market. Don't be lulled into complacency, folks. Don't be lulled into complacency on either side of the markets. Yesterday, great example how quick you got to be sometimes ahead of this market. Things can change in an instant. We're going to have headlines for the next 90 days. Yeah. Dow, negative 488 points, off 1.2%. The Russell, off by 2.7%, or 51 points. Crude, we're back right near $60. We make it up to 63. We're back to $60. We were at 55 yesterday. How about gold? It's not stopping. Now, let's jump to yields and the dollar first, because, man, we got some dollar weakness out there. Right now, you're looking at a 10-year, 4.35, the yield on the 10-year. Now, what's remarkable here is you look at the move on the 10-year. We're at 4.35. We were at 4.31 about 7:30 this morning. You see the back down in price, you see the rise in yield, and we're right back to where we were, kind of for the better part of late February, March, 110.28 with the 10-year flirting with about 4.35, and we get to the dollar. Yeah, and this is the biggest move of all going on, folks. We got dollar weakness right now, period. End of story, dollar weakness, right? You're talking about not getting back anything from the move. So markets rejoice. Let me just put it on a 10-day, 30-minute, okay? Markets rejoice. There's the action that we got on the initial tariff announcement. And what's remarkable is, where are we? We're right where we were at the end of the first day. We have dollar weakness regardless. You make it up to 103.50. We're back to 101.70, pushing the lows. And no matter what time frame you put it on a daily, looks like we're heading to 100 right now. You put the dollar index on a weekly, no strength whatsoever. You're talking about trading from 110 in January to 101.70 right now. Yeah, DXY continues to look weak, even with the market action yesterday. Huge weekly bars to the red, and you don't have to be a master technician, as I say sometimes, folks, to see that this chart looks like it's going to 100, man. And, boy, you want to talk about bigger picture? Let's go bigger picture. You break below the 100 area, where are we heading? We're heading to 95, and 90 realistically. 95, nice round number, but 90 looks like it's on the card. So the next stop, we break through that level, and yeah, you should probably face some resistance at 100. 100's been a ceiling at times. It's been a floor at times, but we got dollar weakness in this market. A few gold bulls out there, gotta love that, man. Golds. We're up $150 in the last two sessions, folks. $150 in the last two sessions. We were down to $29.70. And yeah, you charge higher from where we were less than 48 hours ago, and we are pushing all-time highs. We're at $31.45 in the price of gold right now, up by 2.1%. You jump over to silver. Silver up by 50 pennies, 1.6% to the upside. What I will say here is, and great question from Fletch in the den, talking about, silver bull case. We're looking for a bull case. In my opinion, folks, if you're looking at metals, silver is still the laggard. You look where silver is right now. You're at $31. You're just trading around in the middle of the range. 32 has been an area of resistance to the upside. You rip lower in that area. You put silver on a weekly. How about that weekly volume last week, right? We get a huge spike. Now, yeah, we got 2 full trading days. We'll probably get some similar volume. We did 447,000 contracts last week. We're at 329,000 contracts already this morning. But it is interesting that you look at silver at $31. We're where we were in May of 24. You back up gold. May of 24, we were trading at 2,400, folks. Silver's at the same price. Now, it's right to be looking at it, because if silver's lagging, are we going to see some catch up? It's underperformed for some time, but I'm just not seeing it on the charts just yet, folks. Look at the reaction in gold over even the last couple days. Up $150. Silver catching a pop, but not to the same degree. All right, let's get over to the news this morning, and we got plenty of it, as usual right now. Let me see if I can find the right tab going through all these. Here we go. We kick it off with, come on, not the pause, not the Fed, not the House. Where were we? Well, that's the one I thought I had. CPI, 0.1% is the month there. They're going to have all the live stuff. I had the whole headline numbers in here. Nonetheless, 0.1% on a month. CPI comes in light. We were looking for 0.3% was the number they were looking for. Come on. Okay. Core, up 0.1% versus a 0.3% forecast. That's the headline the market's dealing with. Headline CPI actually falling by 0.1%. One of the components in there, gasoline. Okay? Energy index falls 2.4%. Gas prices slump 6%. That's contributing to the headline number, of course. Okay? Food rising 0.4%. A lot of talk of eggs in the Tiger's Den this morning. Rightfully so. And yeah, I would agree. Eggs, folks, while expensive, a remarkable source of protein for cost. You know what else is amazing for cost? Bananas. Go out and get some bananas and some eggs for breakfast. I'm always amazed. I say to myself, man, if I was really struggling, I would just buy myself 5-6 bananas, couple bucks. You know, I have a banana or two. I'm full. That's it. Bananas. Go get some bananas. Eggs as well. Great source of protein. One of the healthiest fats out there. Eggs and proteins as well. Okay. I'll get off my protein kick, but eggs, yeah. Declines in prices. Airfares. Motor vehicle insurance. Used cars and trucks and recreation. Used cars and trucks is an interesting one, right? There's going to be a lot of demand coming into used cars and trucks ahead of potential tariffs. One of the tariffs that is not reprieved, is cars. So that's going to continue to play in. Yeah, gas down 6.3%. So don't pay attention to the headline number. The Fed does not prefer the headline number. The Fed prefers the core number, which takes out the energy number. But yeah, we got a market this morning, man. We get the S&Ps negative by about 2% right now. The VIX, yeah, we pair some of the gains. We're still pushing 37. Elevated VIX when you look at where this market is. But guess what? Where we're trading right now, you better believe the VIX is going to stay elevated when even following the news yesterday, we're off by 2.5%. We get a reprieve. We'll see where we go from there. Lots to talk about, folks. Stay tuned. We're coming right back. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Welcome back, folks. S&P's off by 1.8%, 53.94 right now on a larger term basis. Okay, you take a look at this market, and we're right at the 50%. It's a critical technical area. Let's put this out on Market Insights this morning. Folks, if you want to check out Market Insights, check it out on the front page of TFNN. But yeah, pretty interesting, right? You come into the 50%. We had a high last night of 55.20. The low on March 13th, 55.09. Yeah, you get within 10 points of that low. Okay, you talk about a market, man. That's a technical area. Right now, we're rejecting it. You get back 50% of the move. But yeah, we're still down by 760 points from where we were trading less than 2 months ago, folks. We're still down by 12% from where we were. Okay, don't fire those cannons for celebration. It's not mission accomplished just yet on the aircraft carrier, for those old enough to get that one. So, yeah, we got a lot of volatility going forward, right? You think about the ability. We heard the stories. I'm not sure if you heard the stories, right? They were holding, whatever you were talking about, they were holding it at the ports, hoping for a reprieve, right? They were holding it at the ports, hoping that this couldn't possibly hold because it would just shut down the global economy. They were right, okay? And try and imagine that type of uncertainty playing in. The market hates uncertainty, folks, okay? And this is not a technical take. It's a pure factual fundamental take that the market cannot stand uncertainty. And there's still a lot of uncertainty weighing on this market. You know, you got down to a price point of 48.32. Yeah. Okay, risk reward wise, the S&P pulling back, what, 1,300 points, 20+% in the period of 2 months. Yeah, it was due. Okay, the story leaking out there, President Trump, the story about a 90-day pause that happened. and then he said it was fake news on Monday. Turns out it was not fake news. That was correct reporting. Okay, that was getting discussed over the weekend. That was reported on Monday. They jumped the gun, and then they did it. The indication was there. Okay, that was real news. That was not fake news. That was real news. I wonder how that happened. I wonder if they were planning to do it on Monday. I wonder if it happened, and then they said, well, why are we going to do it Tuesday when the market just traded up to 5,300? You got the reaction you got anyway. And then they did it yesterday when the market was back below 5,000. Okay? But it was out there. Period. And it's going to be out there again, but on a longer-term basis. We're coming into earnings season. Going to be interesting to see what some of these companies have to say. It's not happening just yet in terms of the inflationary forces, the pullback, not happening yet. Look at the day Walmart yesterday, up at $10. Company like Walmart, right? Finishes near $89.60. We're trading just slightly off that number at $88.80 this morning. And I'll tell you, folks, we had a buy of an equity yesterday morning in Market Insights, okay? So, you can do both sides of this. I think pressure right now is to the downside, okay? But you better believe you should be looking for opportunities when the market pulls back, when you're looking at especially scaling in, okay, longer term, but even shorter term. Set your stops no matter where you get in. But yeah, you better believe that there's going to be rip-roaring rallies, even if the market is facing some downward pressure. So we're still 760 points from the downside, folks. Okay, we still have a lot of uncertainty. And what is going to happen 90 days from right now? And folks, 90 days ago is about the inauguration. 90 days flies, man. Okay? And the market needs certainty, especially to make the type of structural changes that this administration talks about. So that's where I'm still skeptical of the market finding the room to breathe higher across the board. But yes, relief rally indeed, because nobody really knows where it's going. And okay, so I guess, worst case scenario for the time being is avoided. And the market, rightfully so, rejoices. But we'll see where we go from there. Getting back to those CPI numbers for a moment. Motor vehicle insurance is in the negative, okay? Airfares down 5.3%. Core inflation, yeah, that could potentially give the Fed the ability to cut within the next two meetings if the other economic data is weak. Yesterday is a real wake-up, though, in terms of what the Fed is facing and why they're going to be very hesitant to act with financial policies when their monetary policy is reacting to governmental policy that could change on the dime of a hat. And you don't think Chairman Powell is aware that Trump would love to force his hand to get lower rates? And then what? Trump takes off the tariffs and Chairman Powell hikes the rates right back? That's not what he wants to get into. Okay, so that's one of the factors for the Fed. I was talking to Jacob yesterday, as in why they're going to be really slow if we face some more heat here. Be aware of how skeptical the Fed is going to be to step in to correct what the market perceives are just different policies that have changed the landscape of the economy. And so that is going to be one factor that's going to be difficult. But guess what? Lower inflation is going to help. And yeah, maybe we get some cuts if we're dealing with lower inflation. If you do get weakness, they're going to have the ability to cut. But no real huge reaction on the rates just yet. As we're sitting at 4.32, we have lower price, higher yield right now. But boy, we got dollar weakness. That's for sure. DXY 101.622. We put on a 5-minute, and we're pushing the lows that we had at about 8:30 this morning of 101.61 on the dollar. And yeah, that's pushing gold one step higher, man. We're making session highs as we speak at $31.53, up $75 in the price of gold. You check out some of the gold companies yesterday, right? How about Harmony? Let's put it on a daily. Harmony, look at that jump. Yesterday to $14.69. We got highs out there at $15.22. What are some of the others? New Gold, not quite the same. New Gold up yesterday from 3 to 325 or so. Check out some of the silver stocks. Look at the different story, right? Look at Hecla. You compare it to what some of these gold companies look like. And hey, what I will say is, you're looking at silver, you're looking at Hecla, that's nice volume. That's nice volume. And this is where, folks, you want to trade? Here's a trade. Okay, Hecla. You're trading at 528. Put your back against the wall, man. Put it under this $5 number. You're trading at 528 right now. You give yourself 20, 30 pennies, okay? And you get a stop. This thing you could get stopped out in a day right now. But you take a look at this on a longer term basis. You set your stop somewhere around the $5 range. You see how so many times it's acted as a floor, but then you get the general area. You want to give yourself down to 482, the lows of November, December? Yeah. But you know what? I'm looking for areas in gold versus silver equities. Another one, Pan American. Strong move yesterday, but didn't even have the volume that you had. Excuse me, that's the week. Yeah, strong move yesterday, but didn't have the volume, had the lows. And we're just back to where we were on April 3rd. All right, folks, we're coming back for the opening bell. S&P's off by 97. NASDAQ 100 off by 423. Don't go away. We'll be right back.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are April 11th and 25th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. With markets open, S&Ps kick things off down about 2%, off 2.1%, off 111 points. NASDAQ 100 right now, we're negative by 2.5% or 476 points in the red. In a slightly critical area as we're approaching pre-market session lows, but we'll see where we go. The day is young. Dow off 663 right now, and the Russell off by 49. Check back to the dollar, 101.62, and that gold contract, 31.48 right now. All right, we talked about tariffs aplenty. We talked about CPI. The EU is going to pause metals counter tariffs against the U.S. for 90 days. De-escalation. We like to see de-escalation. This is the level of uncertainty you see occasionally, though, folks, okay? More container shipping companies are canceling sailings from Asia to the U.S. and Europe, according to shipping data. Yeah, blank sailings in which carriers remove capacity by canceling or delaying a journey were meant to arrive in European ports in April, May, and June. Okay, we're seeing blank sailings across the board. Not yet fully alarming levels, but a significant uptick. This is some of the headwinds on a longer-term basis that you are going to see this market facing. You jump to Amazon. This one hit earlier. They hadn't even hit the article. Not surprising. Okay. Andy Jassy, Amazon CEO, he believes sellers are going to pass increased tariff costs on to consumers. It's either pass the cost on to consumers or eat the margins. Both of those are tough, okay? But the company has seen some evidence of shoppers buying ahead. We've seen that happening for sure. And yeah, I think they'll try and pass on the cost. Talk about the most obvious statement in the world. Okay, anyone's going to try and pass on the cost when they can. And what's going to happen is the competitors that don't have those tariffs are going to see wherever the competitors are that have those tariffs, and then they're going to raise their prices to an appropriate level that they can while still remaining in the profit. And yeah, he's saying they started diversifying their supply chain 5 years ago. It's not just in one country. Well, time will tell how diversified some of these supply chains actually are. And then you go to the House delaying the vote on the tax cut and the debt limit plan. I'm on the deficit spat. With everything going on in the tax cuts, this makes it very difficult with everything going on the tariff front. And the market's going to react to that. So you put all that in context, okay? You talk about a situation where, as of right now, even with the pop, that acceleration to 6,100, folks, remember, it began at 5,800, okay? So it's really not fair to judge Trump on where the year kicked off, because the market had already popped at least a bit, a couple hundred points. You kicked off the year, what, 5,900, 6,000, something like that, made up to 61, 66. All of this stuff for tax cuts, deregulation, that's what was some of that acceleration from 5,800 to 6,100. That's becoming difficult right now. So if that's difficult, that gets us back to 5,800. And then you have the tariff uncertainty weighing, and we're only a few, if you go to where we were prior to the election, folks, 5,800, what? You're 8% below where we are right now. There's a level of uncertainty. There is a level of uncertainty there. Get that stop in, Darth. He's picking up some heckler. Get that stop in, no matter what, though. That's the key right now, folks, is what I would suggest. It's one thing you're keeping in equity for 20, 30 years, but even the silver golds, my dad talked about it many times. You can't hold those equities forever, folks. Much better in those equities to be trading them even on a much longer term basis versus equities like Apple, Microsoft, Amazon, that you could put it away for 20 years. Now I say you'll be all set. Now you talk about some buying. Okay, if you are looking for areas, still might not be too late, but yesterday those lower days were quite days. I put these charts out earlier in the week for Market Insights. Getting in at Microsoft prices at 350, at least starting a position. Can't argue with getting into Microsoft prices where we were 4 years ago. Okay, longer term basis, you got 10 or 20 years, yeah, stow it away at 2021 prices, folks, and you'll be fine. Okay, now anything can happen. Okay, we've all seen the likes of the biggest companies in the world go bankrupt as time passes them by, but that's not how I treat the gold and the silver equities. But yeah, we got action. And you know what? I think we got weakness in the dollar no matter what. And so with weakness in the dollar, that's going to lift everything when you talk about metals. Yeah. All right, we're talking up Heckler in the den. Taking a longer term look at this chart. Look at these silver charts, folks. This is why. Look at this silver chart on a longer term basis. Be careful holding these silver charts, folks. Remember what gold's done over this time, okay? And look at this chart of Heckler. You're in a losing position versus many of the prices this equity has traded at over an extended period of time. If you're fortunate enough to have some great executions, you get in EKS and, $1.99. But longer term, how do you hold? How do you buy and hold an equity like that? Right? And you can jump around. Look at Harmony. Same deal. You got to look at the longer term chart of these folks. Some of these equities, now boy, you got buying opportunities everywhere, okay? But some of these equities, buying and holding, look at these charts on a longer term basis. All right? Yeah, how about this one? This one looks broken. Mux. McEwen. How's that for a chart? Think about what gold's done over that time, folks. Okay, that was not factored into the prices. Some of these equities, and I'm just jumping around. Let's see. New gold. Yeah, look at these equities, right? Not even at the highs you were at in 2016. El Dorado. And I'm just cherry picking equities right now. All right, that's a strong one compared to where we were. Yeah, look at that move. El Dorado up another 2.1. That's a strong stock, El Dorado, right now in that gold market. Look at where we've been from $5 to 17 recently. But longer term basis, again, not even close to what we were doing on the last peak, 110 to 17. I'll go through some of the more equities, but man, there's a good one for you. Wheat and precious metal on a longer term basis. All right, look at that one. That's an all-time chart from 2005. There's one that looks like you might be able to hold. All right, we got a little bit of a market melt right now. Let's jump over to the Magnificent Seven. Apple. Look at that acceleration late in the day, right? Even on the pullback to 3 o'clock, Apple trades up $16 from 3 o'clock. That's like a 9% move in the final hour of the trading day yesterday. You talk about volatility. We're off by 3%, but you're catching a little bit of a bid. We just traded up by $3, $4 on the open for Apple shares. We jump over to Amazon. Negative by 3% as well. We jump over to Microsoft shares right now, negative by 2%. Google, slightly in the red by about 0.9% right now. TJX, talking about this equity yesterday, up by 0.6%. If you are looking for a good equity, folks, look at that chart on a longer term basis. We talked about TJX, we talked about McDonald's. Everything popped yesterday, but right at the bottom of that channel line, TJX higher by 0.6% today in a negative market. McDonald's, slightly in the red. Stay tuned, folks. We'll talk some crude. We'll talk some other stocks when we get back. Don't go away.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at direction.com. Read carefully. Distributor Foreside Fund Services, LLC. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
All right, welcome back, folks. S&P's off about 140, pretty close to where we kick things off. Dow, negative by 900 points right now. Look at those weekly bars, right? Magnificent. You're talking about a weekly bar last week that stretched from a high in the Dow of almost 43,000 down to 38,400. You're talking about 4,400 points last week, and this week you're talking about 4,400 points, right? Yeah, 4,400 points, the weekly bars. You talk about it, man. All right, we jump around to what else we have going on in this market. Yeah, this is what I want to get to. This the service category, right? Look at the services. So the Journal, I'm going to post this one in the Tiger's Den for a gifted article too, folks, okay? This one, you talk about services. This chart here, let me back it down to get the full thing in the context. There we go. This chart is the U.S. services exports by category. More than excess of $1 trillion, up from what? $300 billion in the year 2000, okay? And you're talking about travel, financial services, intellectual property, transportation, telecom, and everything else that they throw in the bottom, which is what, 250 billion. So how does that play in, right? It doesn't play in at all. But the European Union, U.S. services, imports and exports, okay, in terms of where we are. The EU, you're talking about exports on the EU side, okay, services surplus, exports on the EU side, and you're talking about imports. You can see the numbers, right? The amount we are exporting versus importing. So this is going to shift into the conversation. It's one thing. I'll post it in the den. It's a long one, man. But you can see services by export. They break it down everywhere. Services, a huge component not getting talked about with the trade versus physical goods out there. That should probably get a little bit of attention. There you go. I'll post that one in the Tiger's Den for you. And I'll post it over on the YouTube Tiger's Den as well. If you're over on YouTube, get into the Tiger's Den in there as well. We're talking about everything, man. And yeah, good old Clearwater Beach. We're talking about the Opal Sands. And I haven't checked out that new Clearwater Beach hotel, Darth. I guess I'll have to check it out. The new Opal Soul. The sister hotel to the Opal Sands. Now, isn't the Opal Sands owned by the same company that owns the Sand Pearl? I believe they do. But I posted that article out there. Let's see how we're doing on volume as we kick off the trading day right now. Yeah, that volume spiked towards the end of the day yesterday, man. The final hour of trading and, orders on close on a day like yesterday. NASDAQ, we're talking about 253,000 contracts. I'm sure we'll get some on-close volume as well, but man. Yeah, look at Harmony. Harmony's on fire. Maybe go get yourself some Harmony too, Darth. Can't hurt. Get some Heckler, get some Harmony, and that's what, there's nothing wrong with looking for exposure across the board here, because I think we have dollar weakness, so no matter what. But boy, gold has been stronger, to put it lightly, right? Gold has been stronger. And I'm just going to look at one more thing. Give me 1 second, folks. Forgive me. I'm pulling up one. Because I didn't want to. Yeah, I'm looking at the gold report, okay? Because let's go down the line here. Yeah, look at Agnico Eagle too. I knew I was missing some good ones out here, okay? Agnico Eagle. And folks, head on over, check out the gold report. I'm writing it now, trying to live up to the legacy of my dad. A mission impossible, but nonetheless. And we cover many equities. I think it's 25 equities every week. And we got a market right now. Look at this AEM. Right, you put it on a 3-year weekly. You break back in this channel line, and this week we're probably going to do more volume than last week. We've already done 18 million shares, and you look at the daily as we bump right back in that channel. And yeah, it's an art, not a science, folks, okay? You put it on a daily, you can see the way this channel was consistent up until about November, and then we're pushing back into it, though. Remarkable for AEM. Agnico Eagle. Let's see, AGI. Yeah, another strong one, right? Look at this thing. Upturn channel. Alamos Gold. These gold equities, man. Look at that bar. You're going to get a bullish engulfing over the last 3 or 4 weeks on AGI. One that's coming back to test. How's CCJ? Yeah, this one, the metals equities right now are not created equally. Gold is the leader by far, okay? CCJ, uranium, okay? We're talking about uranium, fuel services, the race for energy, everything, okay? Longer term, I think they have a real play here. Shorter term basis, there's pressure to the downside, but if you like your back against the wall, man, there's a bid, right? It's right where we bounced. Cameco in 2024, you make it to a low of 35.43. You make it to a low of 35.89, and just recently we traded to a low of 35 on the dot. We'll see how the volume comes in. It'd be really nice if we could get more than 25 million shares on CCJ to the upside. That's a uranium play, okay? And again, if you're trading any of these, get you back against the wall. This is just like a Heckler trade, okay? You've pulled back. You're testing a technical area. We'll look for a sign of a acceleration on higher volume, looking for a sign of strength. But yeah, we're negative by 2.3% again today, but you can see testing that area that we've bounced from before, down from $62. Similar to Heckler, not identical, but a stock that's been bearish, you're getting it in a technical area that you could trade higher. Now, we talk about the copper stocks, as in not created equal, okay? That's a chart of copper. Looks like we've peaked out at $5 for right now. If you're looking to buy copper, $4 the area for copper. You're looking to get into the copper equities, maybe you let copper bounce again to $4. But in general, they look weak. I wouldn't even touch these copper equities right now, folks. Freeport McMoran. Yeah, look at this. Hadn't pulled it up prior to the show. Down 6.3%. The other one is SCCO. Yeah. You see how the gold equity is breaking back within these channels? And you have Southern Copper. Psh, what are we doing? Southern Copper is trading at prices that we were trading at as far as I go back on this weekly. Probably farther. So you got FCX week, Southern Copper week. All right, we jump back to some of the gold equities. Franco-Nevada. There's a strong equity. Breaking higher. on a weekly basis. We're going to do it on more volume than the prior week. There's a nice one that you might get a breakout. So look as I go through those gold equities, right? Lots of strength on the gold equities. Silver stocks, copper stocks, back against the wall. Folks, one more segment. Don't go away. We're coming right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We get the S&Ps right now pretty much just chopping around where we've been. You could say pushing the lows. We'll put it back to a 1 minute just to see the volatility we've had. It's remarkable in these charts, folks. You can't even see the volatility because the movements are so large. In terms of the S&Ps, from 5,400 at 9:30 this morning, we trade down 60 points, okay? We trade up 45 points, and we're down 25 from there. So don't think this volatility is over just yet. Yes, we're going to subside a bit, but 90 days is going to come again. And for traders, as they say, volatility, a trader's best friend. And we got volatility, man, in this market. Don't be afraid to make more trades. Keep those stops tight. Okay, difficult in this market, but I'd much rather make a lot of trades, keep those stops tight, than get tied to a trade. And you see the carnage that can happen yesterday. You know, if you're in this market, there are going to be 10 to 12% moves in indices that are possible at any moment at any time. That's a level of uncertainty that's going to weigh on the market, and it should weigh on traders as well, because you need orders in there if you're not willing to take it, right? If you're bearish the market with something like the QID yesterday, you know, you trade the QID from the run from 30 to 50 yesterday, okay, you better be willing, even if you're in this market. Maybe you're short day yesterday, all right? You just dropped from 46 to 35. Now, it's a double exposure, but you got to be quick in this market because it can happen at any time, anywhere. We jump back to the dollar. Yeah, trading lower, man. Dollar weakness in this market. We'll see if it can find a bid. Next stop is 100, man. King dollar going to 100. It's on the charts. We got a low out there recently. We'll see if we can break it. That low from April 3rd, 101.267. We're trading at 101.494. All right, folks, thanks so much. NASDAQ 100, we're off by 555. And don't forget, Larry Pesavento, he's got live trading going on tomorrow. We got enough going on in this market. Great time to sign up, folks. You get 2 classes with Larry for the month for $295. You can save $50 off of the price. This is a month to get in there. That's tomorrow. Folks, I'll see you tomorrow morning at 9 o'clock. Have a great Thursday, everybody. See you tomorrow. Basil's up next. Stay tuned.